Hey traders, Happy New Year. Oh Boris, yet another lockdown. In this video we look at the trendline breakout that occurred on the Australian dollar. We're going to explain what led up to this trade and why we took it. During lockdown, you can make money from your home. If you find value, please subscribe. Here's a disclaimer, it's required by law. And remember, we enter all trades with risk. Let's get to it. Good evening. So it's easy when I'm recording this. Happy New Year, by the way. Guys, I just wanted to do a quick review of the Australian dollar. Haven't done a recording for a little while, actually, to be honest, and I am sorry about that. I do plan to get more regular. This is the first one of the new year. This Aussie dollar has been an interesting trade, to say the least. I don't plan to take long with this video, but you know what? As we get talking, obviously, we get talking. I remember being over here, and this channel had formed, and we had been trading this up and down and up and down and up and down, right? It broke out above, and we stayed in it. We caught this, and then we caught this. So that was pretty good. We made some nice pips there. Now, I personally thought that this would have been an A to B, C, D correction down to this 200 moving average here. But, well, clear to see that that did not happen. Okay. What occurred was something totally different and quite unexpected. We got HB, and then we got this, which was a stop run on these lows. I don't know if you can see it. If I get this, you can see that little wick there. It was a stop run on these lows. We get that W formation here, right? You can see it so clearly, can't you? I think on the New Zealand dollar, it's an M formation. These are typically reversal patterns. So the W would be at the bottom of a trend to go long. The M would be at the top of a trend to go short. But what we found is that this has happened in the middle of the trend. Okay. So this here looks like a continuation pattern. But on the New Zealand dollar, we have this pattern, which would be a reversal. And then it continued on up. So patterns are useful. Of course they are. We're not going to deny that. But sometimes patterns do their own thing. Okay. And we saw that happen here. And since that time, what we've had occur is we've had a run, a little dip down. There's a retest of that high there, and then, well, we've just more or less had a straight run up, up. So the question is, here we are now, and what do we expect to happen? Okay. So one of the things to do is, of course, to look at price and to sort of try to understand and gauge, hey, what's been happening with this pair? Now, in all due honesty, in this run up here, like this move here, I expected, again, with a degree of error. Okay. This is just trading 101, guys. This move here, it was a nice run up. I would have expected an A to B, C. It's a correction move. Okay. Remember, these highs here have not been retested in any way of significance. Yeah, this wick is not really, this is more of a retest. I can sort of respect that more so. Not being retested really. And so, like you see this breakdown here, pullback, drop. That's a nice retest, nice gap in the area here, right? Retest, and that's why I thought this would have at least made it thus far. Right, so I had taken off some positions in here, but obviously I left a runner, and obviously boom, gone against me. Got up here, I was like, oh Lord. I mean, this is equal lows down here somewhat. It's a double top, right? Who hasn't seen that pattern before, right? Let's have a look. Up, down, up, down. There's a top, there's a top. Whee! But you know, the premise is that, hey, this 200 MA is going to get hit as a retest. Did not happen. And here we are on this is the daily chart, right? Since the break of this, right, moving average, we have not had a retest. It's not been touched. Okay. So my thinking is look back in history. Okay. And so I do that and I go back in time. And again, it's not meant to be a long video. And what do we see with that 200 MA? Yeah, so the market's trending down. Trending has gone a long way, but eventually we get a touch. We get a touch, we get a touch, we get a touch. It always gives a retest. Look, it broke up above, came back for the retest. Right, down, came back for the retest. Typically in this here, I would have just traded to there because I expect the retest and then the continuation. Sometimes the market will do something else, but nonetheless, there's a basic premise here that when we break above the 200 moving average, we run away from it. Typically, we're going to come back and give it a retest. Look, we broke through here. Look, we came back. We gave it a retest. Then we ran away. Retest. Ran away. Retest. If you look at this retest, look, to get back up to 400 pips, to get back. Hey, and look at, I was just talking about chart patterns, guys. Can you see this? This is a clear W pattern. Happens at the bottom of a trend. Right? And then price continues on up. You get some continuation up. What we saw happen there is midway, we get that W pattern rather than a continuation up for, look, a retest. The market just turned over here and just went down. So as I say, patterns are useful, right? But sometimes a pattern's going to do what it wants to do. And this is a classic of that example of where we see a W and it continued on up. And then we saw a W where it just did a stop run and then went down. So that being said, we was expecting the retest, and you know, we can go back over a period of a long, time to see that, you know, breaks up retest, down retest. You just keep going back. And when it's had a long time without touching the 200, guess what it eventually does? It touches it. Okay. Check this out. You can see bottom of a long trend. Here's the W pattern. Price is going to reverse. And notice this with this W pattern. Okay. Oh, is that a stop run? It didn't quite make it. But what happened was it dropped down. And then when it got to the bottom of the W pattern, that was a stop run. And then it went up. Just a classic example. We're understanding price action here, guys. And we look here, we got the W pattern, right? So following what we saw over there, I mean, bloody hell, it's just upside down, sideways, to be honest. Get here, you think it's a stop run, maybe a down, but that's a W pattern, just in the wrong place. You get it at the bottom of the trend. Here we've got midway. Now, when it's happening, you can't quite figure out, hey, right? You can see it and you're like, well, what does that mean? Okay. It doesn't happen often where it is trend continuing. It's normally bottom of a trend reversing, bottom of a trend reversing, bottom of a trend reversing. Okay. Top of a trend, you get an M pattern. And then on the New Zealand dollar, we had the reverse. So, you know, you look through these chart patterns, you want to understand what's going on here. Bottom of a trend reversing. Midway of a trend. Let's say if we was to look at this as a W pattern, midway of the trend. Here's the trend coming down. I think you would agree. This looks like a W, right? There's a center point. Move across there. We broke through the center, we pulled back, we continued up, did a stop run here, right? We tried to get to the 200, but we couldn't make it, and then we flopped, right? So if we look at that there, and then we compare that to, so that's a midway W. We compare that to this one here, which is another midway W. And then we sort of apply the same sort of analysis, right? So we got the bottom, we got the here, down, up. Do you know what I mean? It just doesn't seem to, it just ran away, right? It didn't come up, break above, and then, right, continue. So my thoughts are, well, we've broken well above, right? My thoughts are, if you want to call that wick a retest, I don't, but my thoughts are it's gone up, and then what's going to happen is going to come back down at least for a retest there, in there, and you see these are more or less equal lows down there, but really it's aiming for the 200 MA. Now, how long that takes, we don't know. So what we have to also consider is that as it's taking time, this is going to be the trajectory of the 200 MA. So if the price was to just go along there like that, right, the 200 MA is going to catch up to price. So this doesn't have to fall all the way down here. It could just go sideways until the 200 MA catches up. If it goes sideways, pretty confident it's going to hit this level here. Can't be as confident it's going to hit this level then, is it? Because, right? But at some point it's going to drop. Now it could just do A, B, C, D, and hit the 200 and then continue on up. Well, that's what we're ready for. But the trade for right now is price reconnecting with the 200 MA. Just very quickly, because time goes so quick when you're doing these videos that it's hard to keep up. This trend line, if you drop down to, let's say we drop down to the hour chart, okay, that's a trend line. That could also be a target. It looks like nothing on the daily, but if you see on the 4 hour here, look at that. That trend line has found quite a fair bit of respect, right? And then we've got this move. So take the trend line, do a copy across, right? Click and copy it across. That looks like a channel. What do we know about channels? Well, here we had a channel. If you can't see it, let me fill it in for you. Yeah. Right? Here we had a channel, right? And this channel broke to the upside, right? You look for a retest for a continue. That's interesting, isn't it? Normally you break on the channel, break of it, you look for a retest for a continuation. And what did it do? It tricked us. It dropped in. Now, I would have been looking for the retest of the 200 MA, but traders have different strategies. Break, retest, some call it break, hook and go, break, retest, continuation, right? But here it dropped into the channel, and then it follows along in the channel, and it breaks out below. And where's the retest? It didn't give it, did it? Right? And it just ran off. But it did come back to retest the 200 MA. Right? So we're understanding price action, right? That's what we're doing here, guys. So now when we come across here and we see this happening, we see it's another channel, we're going to look and think, okay, what are the potential, what are the probabilities? Because if we look at it here, the channel had started, a tiny little channel. Here, look at this. It broke out above the channel, broke down, back down inside the channel, hasn't touched the moving average yet, broke up, broke down inside the channel, then it broke up out the channel again. What is it gonna do next? Well, premise is it's coming down for the 200 moving average. As it's done previous time, the price, it likes to at some point, And here's a classic one, which, you know, it's going to connect with a 200 moving average, but it went sideways in a channel. The moving averages caught up with it before it finally broke. And that's why I say, in the same way, it could go sideways. The moving average comes up in this trajectory here like this, and then price may break. So we may have a couple of weeks to spare on this trade. We drop down to the hourly chart, and we've had a lovely move today. We picked up on that move, first day back of trading, and we've seen a correction of sorts. Okay. Now, what we'd be looking for here is an A to B, C correction, at least to this line here. Right now, here we are in the hourly chart. That looks like a pretty big move, right? How much we're talking? We're talking, if we went there, that's 100 pips, right? 100 pips. Right. Now, if we look at it on the daily chart, right back there, 100 pips is nothing. Sorry, that's not even the daily, that's the 4-hour chart. If we look at it on the daily chart, 100 pips is nothing. We're looking for it to come down to here, look, 600. But if we've got 300, this potential here and that trajectory, however you look at it, is a much, much, much bigger move. Right? Even if it comes down to there, from where it is now, 300 pip move. So this is an opportunity. It's a big opportunity. It's on the Aussie dollar. We don't want to miss out on this this opportunity by zooming in so much. Here's the hourly chart. Let's go down to the 15-minute chart. Go zooming in so much that we think we can see a really, really big move, when technically it's just the tip of the iceberg, right? So let's put the lipstick on. Okay. Now there's lipstick on can go on twice here, because we can see that there's a trend line here. This is on the 15-minute chart. And we can see that here we had a break of the trend line. We had the pullback pretty deep, but where would our stop loss be? There it is. There's a stop loss, right? The formula is pretty standard. There's a 680, right? Pullback entry around about here, 50%. So we'd have got in here, we'd have been in drawdown. But there we go. We'd have gone for, well, the 618, would have gone for 58 pips, first take profit. Would have had a second entry here. So we got a runner now for the second take profit, would be 42 pips. But here's that, go on the hourly chart. Here's the inner trend line where same thing happened. It broke outside of it. Oh, guys, are you loving this trade, or are you loving this trade? It broke out of it, and here's that M formation. This is a fake out. We've spoken about that in the past. Here again is another M formation. Boom. Right? M formation, top of the trend, sign of a reversal. Right? Top of a trend, sign of a reversal. Here we are again, top of a trend. We've broken outside the channel. This is an M pattern. Yeah. Couple of things to consider. Is this going to go, you know, maybe a little hook and then boom? Right? One thing to consider. Or is this going to do similar to what it's done there, where it does an M pattern? Let's see if we can just scroll this chart back a little bit more. How you do that? You see this little arrow there? You scroll that across there. Now you can scroll the chart back a little bit more. So it gives you more room for drawing ability. Okay. So is this, so we saw the M pattern here. That's an M, right? Then we saw the M outside and above the channel. We've identified the channel. And here again, we see an M pattern outside of the channel. So we're asking ourselves, is this an M reversal pattern that's going to go boom all the way down there, a little hook, right? Or is this the M pattern that's going to do something slightly similar to what happened here? Is it going to bounce up, right? Take out these highs like it did there, then do another M pattern, and then come down, right? It's relevant, guys, however we look at it, because if now you assume this situation here and you thought this was going to run down here, it jumped back up where it's coming up for your stops, right? So taking some profit is important, right? You've left the runner could get, oh, if it came up again, could get stopped out. Like in this situation here, the stop loss would have been there, would have got taken out, and then it would have gone in the way that you wanted. You'd be like, oh my God, it went where, right? And you'd be regretting that you closed the position and look, it's gone. And that is trading, right? So this is why it's important to have a plan and then to trade the plan, okay? So I'm preparing for both scenarios. It can go up, straight down, or it could come out to take these highs, then do another M pattern, which will be clearly visible, upon which I'll get the retest. But I'm pretty confident it's coming down to this line and may well break down below it and then continue on down, because it's going to hit the 200 moving average of the daily chart on the Aussie dollar. Okay. So I'm going to just point out this trade here was a beautiful trade, 60 odd pips. Okay, that's money in the bank. We're looking for the retest here with a possible continuation. We're aware of these equal highs here. It's the first week of the month, so it's NFP this week. Typically, they like to run stops. So we're pretty confident actually then they may come up high, take the stops for a continuation short, or at least come up in the middle here somewhere, perhaps for a retest of the 200 here on the 15 chart, and then continue on down. Guys, I'm trying to keep the video short. There's so much to talk about. We've only looked at one pair, the Aussie dollar. I'd like to go into detail about other pairs. Perhaps there's other pairs that you'd like me to review in the same way. If you do, please comment in the comment box below on YouTube. Like, please subscribe, and for sure, share the video with someone that you think might benefit from this information. We'll get more videos out this year, but this is the first, and I wanted to get it to you so that we got an idea as to where we're going for the first couple of months of the year. And I wish you guys the best trading year ever. It's going to be a phenomenal year. We're going to make a lot of pips. That's what we're going to do by applying the strategy and working together. Okay. I will see you on the next video. All right, guys. Thank you so much. Take care and bye-bye.